make sure happens is that you love something.
Build leads and build relationship.
We start all a business from nothing, and we build them up.
Today's question comes from Renee Nicole Ingram, who is actually one of our students in one of our mentorship programs. And her question is for you, Dave. She's asking, when starting a new business and not knowing much about taxes, besides the fact that I know I must file taxes annually, where do I start? What is considered a tax write-off? And do I hire an accountant or bookkeeper?
That's a great question, and it's a question I get quite often, actually. Well, I'm going to give you different scenarios depending on what you do, and I'm going to tell you like what can be a write-off, what cannot be a write-off. Obviously, it depends on the size of your business first, right? So, for me, for a small business, it can be very simple. It could be a very simple system. I don't think for a very small business or a sole proprietor or someone who's running like a small kiosk or whatever, like to have a lot of accounting, big accounting setup. It could be as simple as using FreshBooks, for example. It's perfect for small businesses. It does your books, you can do the filing and everything like that. So it's an all-in-one. It's an all-in-one platform. If you have a limited number of transactions, in my opinion, this is what you should be doing. Another thing you can use is you can store your receipts, for example, in online. So for me, I use on my phone, I use an app called Wave, and they do like invoicing as well. But I use that service just to save my invoices and my slips. So every time I go, let's say I go to the restaurant for a business meeting, I'm gonna take out my phone, snap a picture of the receipt, and it's all stored. It's all stored online, and I do that for every single company that I have. For a bigger company, I would definitely recommend getting a bookkeeper, excuse me, and an accountant. I mean, when you get to a certain level where the number of transactions is significant enough, it's one of those activities that can become a time sucker. You want to outsource that. Bookkeeping is not that expensive, so you can have someone to, basically what you have to do is print your bank statements, your credit card statement, bring all your receipts, and they will do their job. That's what they do, and then they work with an accountant to file your taxes every year and stuff like that. You have to get an accountant if your business is big enough and generating enough revenue. Getting an accountant sometimes can be a lifesaver because it can identify areas of leakage. So if you have, they can identify, for example, an area of your business where you're spending a little bit too much money, and it can be well if you that or spend less on this or that, you can make X amount more profit. And for some of Matt and I's businesses, we really identified a lot of leakages in some areas, because things you don't realize, because it's all part of operations, it's all part of the things you do on a daily basis, and you don't realize that, oh shoot, I'm definitely overspending in this area. So it can be very, very useful, and usually when the business is big enough, more than often, getting an accountant and a bookkeeper is going to pay for itself because of the money you're going to save by identifying these things. So again, that's if you're a big business. If you're a small business, keep it simple. FreshBooks is more than enough. Now, what is tax deductible and what's not? It really depends on your activity, okay? Really depends on what you do. If you have an online business, for example, it's everything that is hosting, that is your internet connection is definitely a tax expense, and a computer is deductible. Every time you have to fly to a location, for example, for your business, this is deductible, okay? So for example, Renee, who is a student of a mentorship or non-jobs mentorship program, when Renee has to fly for a mentorship meetup every 4 months, her flights, her hotel, her food is tax deductible because it's directly related to her business. This is an expense that is justified because she's going to be putting what she learned there at that seminar or this event. She's going to put it back into her business to generate more revenue. So it is absolutely deductible. Depending on where obviously you are situated, for me in Canada, there's different programs and different things that I can invoice that are probably different from the United States or different countries. So you're really going to have to check. Maybe it's good to check with an accountant, maybe for an hour. Even if you don't have an accountant, just hire an accountant for an hour, and we can give you a list of the things you can expense for your industry. I know there's different things depending on the industry. Sometimes it's you can expense your car. I mean, there's many things you can deduct. So, but always think about what I'm spending right now. Is it going to be to make more money with my business? If the answer is yes, more than likely it is something that can be deductible. You want to add anything, Mathieu?
The only thing I'm going to say is that without some solid numbers, you're deep in the shadows of Midgard.
It is. Matt is the numbers guy in our operations, and he's the one more than often telling me, be careful about this, be careful about that. We are bleeding money there. We have to do something about it. Numbers are important. Don't take them lightly and just pay the taxman at the end of the year. You got to be strategic about it, and it doesn't need to be overwhelming and complicated. Again, there's some pretty easy systems you can do it, and if it becomes way too complicated, get a bookkeeper, get an accountant. I mean, more than often, if it's a small business, they're paid per hour. It's not going to be expensive. So definitely get one or get into an all-in-one platform as soon as possible.
The other thing you want to do
the bottom line is what you measure.
Yeah. Go ahead,
Sorry,
Matt.
Go ahead.
I was going to say the other thing that's really important, because I've worked with you guys as your bookkeeper, which started off to be pretty small, and when things weren't balancing out, or there weren't ways, not balancing out, but when Matt couldn't see measurement, that's when we pulled in somebody above me to help us to see that. But one of the suggestions that I would have, especially for US-based businesses, definitely have a separate business bank account from your personal account, and definitely have a separate credit card that you use only for your business. Do not mix the two things together.
Oh, Kim, that's such a good point. I mean, that's such a good point. And you're absolutely right. It is a mistake that too many people make, and you have to separate the two. First of all, it makes the distinction complete. It makes it clear. There's a clear separation between the two. There's you, there's your business, right? You can be, your business could be you can be a sole proprietor, and that could be you. But I would definitely, don't mix both together. I see too many people just like taking money out of the business as it goes. Like, oh, okay, well, I got 10 grand in the bank account of the business. It's okay, I can take 9 grand. Don't do that. Like, establish a pay structure, for example. Like, pay yourself maybe $5,000 a month and make it something that is coming back every month that you're going to be paid, and the rest can be reinvested into your business for growth. But don't mix both together, and especially if you have an accountant, when things are separate, I mean, it makes things a lot easier. If you don't separate it anyway, it's going to be confusing after after a while, and you are going to make some pretty basic accounting mistakes, and maybe deduct stuff you shouldn't be deducting, or vice versa, right? So very excellent point, Kim. Separate both your accounts, your bank accounts, your accounting, and your business's accounts and accounting.
A couple quick points. What you measure improves by Andy Grove from Intel. You have to track things. So that's why I care about numbers, things like taxes and stuff. Obviously, your account will help you, but your numbers don't lie. Your numbers tell a story. So by having good numbers, you can look month by month, track, see if your revenue is growing, see if your profit's growing, see what your costs are. You know, a dollar saved is a dollar earned. So those are things to keep in mind. And you know, Dave, when we started a partnership, was really kind of number averse, and now has crossed the threshold and understands the value. So even for you guys that kind of hate numbers, and I've had a couple of partners that hated numbers, eventually you realize there's just too much value to understanding and looking at them and not avoiding them. So get in the digits, get a good accountant that can show you, and a great accountant will give you insights. That's the difference between a good accountant and a great accountant. A good accountant just puts the numbers together, and a great one will actually tell you the story that's going on in the numbers.
Absolutely right. I still hate the numbers, by the way, but I learn to, you know, understand them and really get better with them and understand what they mean as far as growth. You know what I mean? And Matt's absolutely right. The quality of your accountant is important. One thing as well, guys, before we go, this book here called Simple Numbers, Straight Talk, Big Profits from Greg Crabtree with Beverly Blair Harzog. Very good book, quick read. It's probably going to help you understand the numbers a lot more when it comes to business. So I highly recommend you reading this, and it's everybody can understand the numbers with this book. So highly recommended.